Moving on, our next panel is on private equity and venture capital. The private equity and venture capital industry in India are increasingly getting dynamic and experiencing notable growth. The country had become an attractive destination for PE and VC investments. Driven by a burgeoning startup ecosystem, a large consumer market, and government initiatives promoting entrepreneurship. The sectors witnessing significant funding, including technology, climate, e-commerce, healthcare, and fintech. However, in the face of economic uncertainties, geopolitical challenges, and market fluctuations, private equity and venture capital firms are navigating headwinds through a combination of strategic adaptability and resilience. These firms are employing rigorous due diligence processes to identify investment opportunities. Additionally, they are leveraging their expertise to actively support portfolio companies in navigating operational challenges and optimizing performances. To discuss this more in detail, join me in inviting our respected panelists, Sameer Nath, Head Venture Capital and Private Equity 361 Asset. Let's give it a huge round of applause for all our panelists. Ritesh Chandra, Managing Partner, Avendus Future Leaders Fund. Richie Sancheti, Founder, Richie Sancheti Associates, Senior Chair. Ladies and gentlemen, I request you all to please clap and be active. We will have break after the felicitation ceremony. Thank you.
So thanks Equalify again for having us on the panel. I'll quickly introduce. The topic we'll be talking about would be the headwinds facing the VCP industry. And to talk about that, I have an esteemed panel with us, and I'll introduce them as we go along. So to quickly introduce, obviously we saw a significant drop in value of the VCP transactions that happened in 2023. $30 billion worth of investments were made, which is down 1/3 from the year before, and same is the case for VC investments. From a headwinds perspective, 2024 has all the ingredients to be a very interesting but complex year. A large chunk of the world is going for elections this year, including India, US. We definitely see a lot of geopolitical risk emanating in the world map. AI is still very, very untamed. There are excellent use cases, but we have not still understood how to govern it, what are the rules around it. India traditionally has always been the skill destination for the world, but what are the AI skills that can be deployed at scale? Needs to be explored, otherwise what would happen to the India story? Again, needs to be revisited there. Again, what would happen once China sort of gets its act together? What is definitely secular is that India is the last large market consumption out there. And with us, we have Ritesh. Ritesh runs a fund which focuses consumption as its underpinning investment thesis. We also have Sameer. Sameer also looks at different funds for 361, which again has financial services and consumption again as its investment strategy. So with that, maybe I would request Sameer, if you could introduce sort of yourself and how do you add perspective to this panel?
Sure. Thanks, Richie. Pleasure to be here. I think the way I'd like to describe our business is we're very unique in the Indian context in that we invest in everything from early stage venture capital all the way through pre-IPO. And we do this in 4 big industry verticals, technology, financial services, healthcare, and consumer. So I think that gives us a unique vantage point into what's happening in the ecosystem, in the Indian private market. And I'll say, maybe a little contrarian, I'd love to get Ritesh's take on this also, is that I think from a venture capital and private equity perspective, you have to take a long-term view, right? This is 5 to 7 years for most of us. And I think there's a lot of focus on the post-21 volumes and market activity which certainly have slowed down. But I think we have to keep 2021 in perspective as an outlier. In my mind, an aberration. And I think then normalize that from a more long-term perspective where there's so much to look forward to, as you just talked about in your overview. So I think from our standpoint, we're super bullish from a medium to long-term perspective. And yeah, would love to talk more in the next few minutes.
Likewise, Ritesh, your thoughts on this?
Thanks. So I run a late-stage fund with Avendus, basically investing in evolved businesses, market leaders, again, thematically focused on consumption, healthcare, technology, and financial services. Just taking on from what Samir said, I wouldn't read too much into the numbers in terms of why volumes have come down or why values have come down. I think there are two elements to it, right? One is in terms of what happened, as Samir said, what happened in 2021, right? It was clearly where everybody and their grandmother was actually, with a PowerPoint presentation was getting money. And, it was euphoria of a different level. 2022 is what I call the year, when you have a hangover after the party. Yeah. That is exactly what 2022 was. We are seeing green shoots come back, etc., right? But there are two things that you have to appreciate. The volume of capital that was raised in 2021-22 has lasted companies for the next 24, 36 months, right? So there is no pressing need for companies to hit the markets at this point in time. And partly the drop in volumes that you're seeing is a consequence of that because the volume of capital that was raised was so large, right? Today, the market opportunity is honestly, I completely echo what Samir is saying, is so large and so attractive. And I think just alluding to your earlier point, what we are seeing in India today, at least in the private ecosystem, is a complete change of mindset, complete change of mindset. You had entrepreneurs coming to us, I'd say 10 years ago, 15 years ago, saying, hey, I want to be the XYZ, I have a US model, which is this, I want to be the XYZ of India, I want to be the Uber of India, I want to be the ABCD of India. Just copying what is happening in the US or China. What's changed today is people are developing solutions in India for the world. And that mindset shift has been very, very apparent and very, very positive for the whole ecosystem.
Excellent. I think the other question for you was that how do you weave all these headwinds coming our way? We spoke about how AI is sort of disrupting, the rules are yet to be discovered. We are also, sensitive that there is an investment strategy basis which you have raised the fund. So does it leave you with some bandwidth and room to maneuver the portfolio in a way where you can take advantage of these opportunities coming along, or do you feel that we are going to see a lot more of follow-on rounds where we nurture our existing portfolio, or do you have some headroom still left in your portfolio construction?
Yeah, I think, look, from a headroom perspective, there is enough headroom left in the portfolio. But just, AI seems to be the flavor of the season, and rightly so, honestly. I don't want to belittle anything that's being done. I think it's a seismic shift in the way businesses across industries will manifest itself. Are we there today from a financing, at least from a late stage perspective? The answer is probably no. We're still in an evolving stage on that. I think what I am, especially on the AI side, and I'd love to hear some of his views on it, I've yet to see a scalable user case for AI to come through, right? Now, let's take OpenAI, ChatGPT, for example, the most commonly used example. Very few people know that every time you put a query to ChatGPT, they lose 30 cents. Now, fine, if it's a Microsoft and I don't care how many billions I have in my bank, it's fine to bankroll, right? For professional investors, that's a very long leap of faith to take, right, at this point in time. So I think the use case has to evolve itself. The business case has to be more apparent for AI to actually disrupt. Are we seeing green shoots of that happening? Certainly, yes. Are we there from a late stage perspective where a model has emerged which is revenue positive, scalable, has positive contributions? I haven't seen one yet.
Yeah, no, I completely agree with Ritesh, and I think I'll answer the innovation entrepreneurial side first, and then the portfolio construction second. So completely echo, I think maybe in the first wave of venture activity in India, people were falling in love with the technology. I think Ritesh is absolutely right. Can you build a sustainable business, right? What are the applications? What are the use cases? Are they economically viable? Are they sustainable? I think they're far from getting into his zone. They're still, sort of coming up the curve. And we'll see, right? I think obviously disruptive technology, innovation can lead to big businesses, but it's still, I think, early days and quite untested. I think that's point number one. On point number two, I think the point on entrepreneurs in India is spot on, right? Look at this generation of entrepreneurs. They are much more seasoned. Some of them are in their second innings or maybe serial entrepreneurs. I think they're looking at India now very differently from the copycat of, let's say, 5-10 years ago, and are looking at the Indian context for disruption and innovation, which I think is a huge positive for those of us on the investing side. I think on your portfolio construction question, Richie, I think it's a little bit of both, right? As Ritesh said, there was a lot of capital raised in 21, and some people are still digesting that. I think the top quartile companies will continue to raise through the cycle. And for the others, we've done a little bit of all of it. I would say I don't think our pace of new investment has moderated too much. Maybe the mix has changed from a little bit of sort of growth and PE to more pre-IPO. That's something I'm sure you're going to talk about, the robust public markets, which I think are going to continue in a big way in 24. I think we've seen a lot of activity on the pre-IPO side. So I would say a mix of both portfolio management and follow-ons as well as new investments.
Sure. The next question was that what are the trends you're seeing in deal making? Do you still see capital on demand for some of the already proven sort of businesses? And do you see a focus on competitive moats for those who are yet to reach that scale? But what are the terms and are there any pressures on valuations that you see from both sides of the table? Like, what are your experiences?
So, look, for high quality assets and what we call market leaders, there is always a tap of capital available on tap, literally, at a price that they want it. Okay, there are, we have a few examples in our portfolio of top tier assets who even in the worst of markets have raised a large pool of capital, right? What's happened is that if you are, what's not happening today is the whole scheme on crazy valuations, etc., is pretty much out of the window. Honestly, competitive moats is something that that's a prerequisite for any investment, right? I mean, if you don't have a moat, then what's the business case for an investment? So I don't think moats itself are any different from what they were. It's just that very, very strong focus on unit economics, very strong focus on how you are, how you're going to scale. A lot of talk happens with entrepreneurs. Look, everybody comes with a great vision, right? The key for me, at least personally, is the ability to execute that vision into reality. And I think that's where the delta is now getting bridged. People are focusing more on granular data points on how are you going to achieve what you're planning to achieve. Is that going to make money for you? Have you thought that through? I think that's where the discussions are headed out to. But if you've got an alpha business, honestly, you will still get alpha valuations.
Right. From your perspective?
Yeah, no, I would agree. I think, Richie, we're here to talk about private markets, right? We're all bullish about what is happening in the private market. If you look at it from, let's say, a new age perspective, only 8 of the 108 unicorns are publicly listed. So there's still so much value to unlock in the private market. Having said that, I think the public markets taught the private markets a very valuable lesson in 22, 23, right? That you can't just have this growth at all costs. This hangover that Ritesh talked about, I think it was warranted, right? So yes, you are seeing many more sensible conversations around fundamentals, profitable growth, capital efficiency, unit economics. And I would say, at least from our pipeline, we think higher quality assets are available at much more reasonable valuations. They're not cheap, but reasonable, I would say. So I think this sort of whole reset that's happened in the private market, starting with pre-IPO, late stage, into growth, and I would say it has spilled over into early stage as well, maybe not to the same extent. That also could be a capital and supply demand equation reason for that. But I think through the private market, this whole reset, I think, is healthy. I know the media is always focusing that, oh my God, volumes are down X%. I think from our standpoint, it's actually a healthy correction, should be welcomed, and probably 24 is going to be a good investment vintage as we sort of see the activity pick up. So at least that's my take.
Excellent. With that, we'll shift the focus on fundraising, since I'm aware both of you, in addition to looking at deployment aspects, also focus on fundraising. So the question for you is somewhat a little wider, that do you see LPs and investors, both domestically and globally, now focus on manager performance dispersion? I'll give you an example. The performance of a public market manager may be slightly in a range. But in case of PE/VC fund managers, the performance on how much IRR we have delivered and so on and so forth, there could be some dispersions. So have you seen that filter into the conversations, or do you see that the LPs have some relationships and they continue to focus on those relationships, as opposed to, like, sort of being a little more discerning on the performance? Maybe some.
Yeah. So no, it's a very good question, not an easy question. Richie and I worked on our first fund together, and I remember now 8 years ago when we were pitching to domestic investors about this asset class, it was like VC and PE 101. I'm just talking about 8 years ago. And because of people here and this ecosystem, fast forward to 24, and at 361 we see it like every day. I would say some of the most sophisticated investor conversations I've had have been with domestic investors. It's really phenomenal to see their understanding of the asset class, nuances, expectations. They've come such a long way in 8 years. And I would say that they're as demanding as international institutional LPs. I think your comment on international institutional LPs, how they look at existing managers, the bar for new managers is very, very true in the 22, 23, 24 fundraising environment. And when I travel either to meet potential LPs or conferences or whatever, I think that's very clear. So I think, having said that, if they were to add, I can't think of a market more attractive than India. So while there is a very high bar generally to add new fund managers to their portfolio, I think the outlook on India has never been more positive. And let me just say one last point on this, is it's really about exits, right? I mean, we know this from our business. Investing is the easier part of this. It's about delivering exits. And I was just reading the APR report for 2023 that came out yesterday. I think for the first time ever, India is #1 in Asia for exits. So I think the market is coming of age, and there's many more reasons to look at India, even though the bar for adding new GPs is pretty high.
Great. And Ritesh, from your
Yeah, I think pretty much similar sentiments. The market has evolved for the domestic audiences. We've got a significant amount of H&I participation. Family offices are getting more structured. Their questions are more insightful. Their questions are deeper. I think one of the crosses that I'd say that the private markets will always continue to hold is that people say, public markets are delivering this, you're delivering this, right? So that's a cross we've got to run with, right? So there's no easy answer out of it. But I think the there is a clear understanding that the ecosystem itself is very large. There is an opportunity there to capitalize on it, and the bigger family offices get it, right? So I think I'd not say that the market has fully evolved. I think there are still pockets of investors domestically who are very impatient with private capital, and I think that level of education hopefully should come in the next few years, because honestly, unlike public markets where you can see, you log on to Money Control, you see your portfolio every day, you're very happy about it. Private markets don't move in a linear manner, right? They move in a step function, right? And that appreciation has to come through to the investor ecosystem, and I think that we're still some time away. I won't say that we are fully there. Globally, clearly, I mean, I think there is a very, very strong India case. Investors are very, very bullish on India. Interest rates obviously were, just given the US interest rates, for example, the case for putting in India was slightly weaker because, you were getting AAA assets at whatever, 8% dollar, right? So the guy was, fixed income guy was saying that, listen, I'm getting 12% equivalent in Indian INR currency. What's the alpha that you can offer me, right? But clearly there is a very strong recognition that you have to play India. In terms of scale, so markets like India, Vietnam, Cambodia are very, very exciting. But in terms of scale, the only market that people are looking at right now is India. So expect a large amount of capital to come through.
Excellent. Now, obviously, we do hear that there is a premium attached to illiquidity in case of VCP funds. But at the same time, this premium has often been underutilized, even for public market allocations, which investors tend to sometimes ignore. The question for you is that now that the markets have performed the way they have performed, do you see the effect of the denominator sort of kick in? That, okay, my percentage allocation to public markets have sort of gone up because of the high increase in value, so I should sort of increase my allocation to private markets. Have you seen those conversations come up in context of domestic LPs?
Yeah, what you've said is the most logical statement, right? But the tendency that happens is, oh, public markets have given 20, 25%, 30%, 40% in the last month. Why should they change? Why should anything change, right? Like I said, the evolved family offices and the evolved clans get it, that the asset allocation should be done in real time. But it's not easy. I mean, think about it from their perspective. Their portfolio in the public market has suddenly delivered 30% in the last 1.5 years, and you're suddenly seeing something which has not moved for 2-3 quarters, and he's suddenly saying, listen, why am I wasting my time there, right? But without realizing that, nothing goes in a linear manner. And I think what we are seeing, at least as the bigger family offices and the more evolved clans get it. The institutions certainly get it. The more evolved clans also get it. Again, it's not widespread.
Yeah. And from your I would agree with Ritesh. I think, Richie, on a lighter note, I think the denominator effect works when things go down. When things go up, I'm not so sure that that's exactly how people think. But no, seriously though, I think definitely agree with Ritesh on the more evolved family offices who are sort of quasi-institutional today, but the others may be a little bit more impatient and wanting to sort of benchmark. Look, I think as a market, just to zoom out, I think, again, following what's happened in the public markets, right? If we were on a panel, let's say 5 years ago, 7 years ago, we would have been talking about FII flows into India, right? Driving public markets, driving IPOs. Look at where we are today, right? With the mutual funds and the domestic funds. I just sat through an IPO committee pitch, and nobody was talking about building the book for foreign investors. Everybody was talking about mutual funds, domestic funds, driving the price discovery, and dominating the allocation. Something similar will happen in the private market, needs to happen in the private market, right? I think if you look at China, the venture capital and PE market really took off when you had RMB funds. If you look at China today, the RMB funds are way more active than the global funds. In 2023, there were more than 2/3 of total VC and PE investment activity. We're a long way from that. I think our stat is something like 20%. But that 20% has to increase. It will increase. And I think what that will do is give us more stable, sort of homegrown capital, probably less swayed by macros, geopolitics, other places, because this is the home market. So I think that is sort of something to look forward to over the next 5 years, which I think will be very positive for the market overall.
Sure. I think sticking to the topic of the panel on headwinds, we have seen spate of circulars come from different regulators, last few months. To begin with, it was SEBI which imposed rules on how distribution fees can be charged, how it can be allocated. In case of closed-end funds, you can have 1/3 upfront. That obviously is a challenge if you are paying to global distributors and placement agents. On the other side, for open-end funds, there were rules around everything has to be on trail basis. This was on the distribution part of things. The second set of circular were from SEBI and RBI, where they said that if you are trunching, if you are sort of having a priority distribution waterfall, SEBI had concerns to begin with, and RBI later on came with a sledgehammer, literally saying that regulated entities should not participate, and they should wind down their positions from AIFs. So have you seen any spillover effects from that coming to how you sort of speak to LPs, who they are, and what sort of portfolio you look at, given that both of you have financial services?
Yeah. So I think let me just start with my observation saying that as a regulator, by and large, I think SEBI has done an exceptional job on the AIF bit. I mean, and that's manifested itself in the scale of growth. There were practices that were being followed in the market which were, I'd say, sharp, okay? And some of the regulatory interventions that have happened have largely happened to curb those, right? Honestly, and I'll just take the 2 points that you raised, on the distributor fee model, I think domestically, it's just absolutely fine. I think that's the way it ought to be, because otherwise the manager has to pay out of his own pocket to do that, right? Yes, it poses a challenge internationally, but that is what it is. This whole SEBI was very, very upfront with allowing direct codes to come in, even in AIFs, and I think that's been a positive development. It'll give investors access to wherever they want. On the pref side, I think, the SEBI's overriding objective is that it's a pooled account business. You think about it as a pooled account business. In a pooled account business, you can't have me liking Richie more than Samir. Sure. In any form or fashion. And I think that's the overriding principle on which SEBI is doing. Some of the interventions have been around that. The one intervention that obviously that RBI brought out, the latest circular on evergreening of loans, that's the one that is actually, if you ask me personally, is of concern, because the objective was to cater to evergreening of loans by AIF. But unfortunately, the way the circular is worded, it refers to it as investments, which theoretically covers all equity investments as well. And that forecloses a large pool of capital for AIFs. So I'm hoping that with, the date is 18th of January, if I'm not wrong. I think prior to that, the RBI should come up with some clarifications on how it's going to be worded. But other than that, I think all the other regulatory interventions that have happened have been very welcome, at least from our end.
Great.
Yeah, no, I won't repeat that. I completely agree. I think by and large, the regulator has done a good job. Some of this was warranted. I think, as an investor, the one thing I'll say is you don't want regulatory uncertainty, right? As long as there's a predictable path, there's a trend, you don't want overreach either, but you certainly don't want uncertainty. And I think I would agree Ritesh is right. I think this evergreening has caused a lot of angst in my colleagues on the alternate assets side, whether it's private credit, real estate. There's some mutual fund regulations that they have to cope with as well. So I think I would sort of turn this question and probably look at it also as an opportunity, right? In some times where, let's say, our regulations are slightly out of sync, maybe with global regulations. Let me give you an example, right? And you know this better than me, about extending fund life, right? And now SEBI has clamped down very hard about funds extending their life. Well, you know what? That's a perfect opportunity for a vibrant secondaries market, which India needs. You know, globally, secondaries volumes are higher than primary. So I think, you know, yes, there is some conservatism and some regulatory sort of issues that you have to work through, but they also create probably a better framework for the smaller investors and can lead to certain opportunities where there could be some product innovation which would end up actually in a triple win, right? A win for the GP, a win for the LPs, and a win for the new sort of innovator, right? That's bringing something different to the market.
Absolutely. Well, thank you so much, and it's been wonderful having you on the panel. And with that, we'll call it to a close.
Thank you.
Thank you.
Thank you.
I request the panelists to please stay back on stage. And now may I call upon Mr. Girish Shankar to please come forward and felicitate our panelists. Thank you so much for doing the honors. You all may please take your seats.